It's 5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know this Wednesday. Trump's Fed gamble. The administration looks for more ways to exert influence, zeroing in on the Fed's regional banks. Sky-high tariffs. The U.S. is crushing 50% levy on Indian goods take effect today. And it's the results that you all have been waiting for. Nvidia will report its quarterly earnings after the bell today. So the drama continues on in Washington, D.C. Is Cook fired? Is Cook not fired? What else is the Trump administration looking to do when it comes to this Federal Reserve? But you wouldn't know that the drama is continuing based off of what this equity market is doing. In fact, stocks rose yesterday. We're unchanged this morning for both the S&P, NASDAQ, Russell 2000 down by 0.1%. We are 0.04% away from an all-time high. Perhaps where the more interesting moves were this bond market. Some serious curve steepening that took place yesterday. It continues today, even though we are rallying across the curve. Two-year yields, those are down by 3 basis points, so pricing in a more dovish Fed. The long end has been under some serious pressure. 10-year yields also fell yesterday. 30-year yields were higher. They're lower by 1 basis point today. The yield curve, though, the 230s, that is at its steepest since 2022. Let's look at some of the stocks moving underneath the surface this morning. With your stocks to watch is Kriti Gupta. Hey, Kriti.
Hi, Danny. It's a great and important day when the Fed, the White House are maybe taking some of the steam and some of the momentum, some of the limelight away from Nvidia. Nevertheless, the pre-market in higher by about 0.5% for the mega cap earnings we are waiting. Is this the macro moment of the week? Nvidia investors, at least this early in the morning, seem to think it's going to be a good read. It's not alone in the green. Eli Lilly is another stock we're watching. The party continues in this stock after just 24 hours ago, news that their obesity pill is hitting an enormous threshold. A massive move in the intraday yesterday and in the post-market continues again 24 hours later, higher by 1.5%. Then MongoDB is going to be another stock that we watch. This isn't a stock we watch very often, but their earnings were a blowout number. Massive beat, really wowing Wall Street, also increasing their full year guidance and now getting rewarded for it, higher by almost 30%, Danny.
Katie, thank you for that roundup, and we'll catch up with you later in the hour. Also this hour, in just moments, we'll discuss more on the risks surrounding the Fed with Allen of Deutsche Bank. Later this hour, RBC's Lori Calvasina joins us ahead of Nvidia earnings. Back to our top story, though, the Trump administration looking to have more influence over the Fed. Take a listen to him speaking to reporters at a cabinet meeting yesterday.
We'll have a majority very shortly, so that'll be great. Once we have a majority, housing is going to swing, and it's going to be great. People are paying too high an interest rate. That's the only problem with housing.
Then we also heard from the FOMC itself yesterday, issuing a statement reiterating that governors, quote, may be removed by the president only for cause, but that the Fed would abide by any court decision resulting from Cook's challenge. Joining us now is Bloomberg's Jill Desis. Jill, let's start with what we heard from the Fed, not necessarily a forceful pushback, but just saying they will abide by whatever the court decides.
Yes, that's right, Danny. I think that this really kind of underscores the fact that what we've ended up the situation in between Donald Trump and Lisa Cook is quite unprecedented. And it is something that ultimately is going to be left up to the courts to decide. I mean, we heard both Trump say that, he was preparing for a legal fight. We've also obviously heard from Lisa Cook's side of things. There's a potential lawsuit in the works here. So it does seem like this is something that may be left up to the courts. I will also point out that Bloomberg Economics measured earlier, saying that it could be that, maybe she gets some kind of an injunction from a court, is allowed to continue serving on the FOMC while this whole thing ends up wrangling there. But I think that, between all of this and what you've ultimately heard from the Fed about leaving it up to the court, I mean, it could be that we're prepared for, or that we need to prepare for what may be a very lengthy legal battle.
It's not just that this administration is trying to do. Our reporting also suggests that they started to look at the Fed's regional banks. It's something that had been pushed aside as maybe a tin hat kind of theory as to the Trump administration really being able to do something like that. Jill, what would it look like for the Trump administration being able to exert that influence?
Sure. So, Danny, I think there's a couple of components at play here. So, first of all, there are the Board of Governors on the FOMC. Those are the 7 positions of which Trump does have the ability to appoint. Obviously, that's where Lisa Cook kind of comes into the equation, where those are positions that are White House nominated and then Senate confirmed. But in addition to that, you've got 5 regional Fed presidents from an overall group of 12, obviously rotating, that are not Senate confirmed. They're not nominated by the White House. And so what it appears from our reporting is that what the Trump administration is trying to do is to gain further insight into how exactly that process works, how exactly they may be able to expand scrutiny over the selection of those federal regional bank presidents. That's, I think, where all of this kind of comes into play. And I think what that does, again, underscore is this idea that this is a pretty unprecedented situation we're in. I mean, obviously you've got the president of the United States kind of wading in on some of these, Federal Reserve personnel matters in a way that we haven't really seen in the past. This could be an extension of that, looking at those regional presidents and how they're selected in a way that we really haven't seen before either.
Very true. By the way, the Wall Street Journal also reporting that the Trump administration is trying to get a replacement for Cook as soon as possible. David Malpass, one of the names out there. We'll see whether that person will actually be allowed into the building or if Cook will be. Jill, thank you very much. That is Bloomberg's Jill Desis. Henry Allen of Deutsche Bank weighing in on the legal response to the fight, writing the following: the market reaction to Trump's move to fire Lisa Cook has proven relatively contained. This is important because to date, an adverse market reaction has proven a consistent break on policy. I'm pleased to say that Henry joins us now. He's macro strategist at Deutsche Bank. And Henry, you make a great point. Sure, the yield curve steepened. Stocks rallied yesterday. The dollar was little move. What do you make of the lack of reaction in markets to the latest developments?
Hi, Danny. Well, as you say, it's really interesting because some of the reaction was as you'd expect, like the yield curve moving steeper. But then again, you had equities and the S&P 500 moving back, almost closing at an all-time high, which suggests markets are pretty sanguine about this. But I think this reflects the extent at which policy from the administration is actually endogenous to the market, in that every time the market hits all-time highs, and you saw this in the first term as well, the administration feel more confident and emboldened, whether that's things like attacking the Fed's independence or being more escalatory on the tariff front. So I think you have that situation where if we get a sell-off, and we saw this in April, for instance, around Liberation Day, when they had the 90-day extension. You saw that again when you had attacks on Powell in July that were considered credible. They would row back again. So as long as the market is doing very well, I think paradoxically that emboldens the administration to keep being more aggressive on the Fed.
Henry, do you see that changing, the idea that the market's going to continue to do very well, that it will push back against Trump? Is there a scenario where we could get to that point? And if it's not moving to fire a Fed governor, what would it be?
I think the market hasn't quite woken up to what's happening here. I was very surprised at the lack of follow-through in yesterday's reaction because, as you showed in your clip at the start of this program, Trump is cognizant that if he can get a majority on the board, then he is capable of changing a whole range of policy areas because, yes, there's the wider 12-member FOMC, but actually those regional bank presidents, it's quite a procedural thing, but they have to be reapproved every 5 years by the Federal Reserve Board of Governors. And that next approval is actually coming up in Q1 2026. So there are procedural mechanisms they could use in order to get their way on the Fed much more quickly than they would otherwise if they just waited for these terms to run out of the board members. Indeed, one other thing they can do with control of just the board is actually the group that decides the interest rate on reserve balances. And normally that just follows what the federal funds rate, the target range is set, and that IORB has moved accordingly. But theoretically, if you did have a majority on the board, they could adjust that in a different direction and effectively take control of policy. So, with control of the board, clearly this is a paradigm shift in the way that monetary policy is operating, becoming much more political.
Henry, in terms of what else this Fed could do, if it is more influenced by the White House, we played a clip of Trump earlier. He was very explicit saying, I'm getting a majority on this board and I want to bring mortgage rates down. That is clear that that is what this White House wants. How effective will that even be, considering that we've seen long end rates move higher throughout the past couple days and indeed throughout the past few months?
That's a very good question. And actually something I'm cognizant of thinking about this entire episode is, on one level, it's unprecedented that Trump is seeking to fire a Fed governor. That's not explicitly happened before. But it's only really in the last 30 years or so that central bank independence has been considered completely sacrosanct. If you go back earlier, the Fed didn't really effectively get independence until the Fed Treasury Accord in 1951. And even after that, you had several presidents, Lyndon Johnson, Richard Nixon, Ronald Reagan. We now know that privately they were putting heavy pressure on the Fed to ease policy, in part to aid their re-elections. Richard Nixon very much did that, we know from the Nixon tapes ahead of the 1972 election. So in some senses, what they're doing is in keeping with a longer historical pattern whereby monetary policy is inherently a political outcome. At the end of the day, this is going to have an influence on who's elected, who's not re-elected. And I think the Trump administration know, just administrations do before them, yes, there is a long-run cost in interfering with the Fed's independence, particularly, as you say, if mortgage rates go higher and most notably if inflation goes higher. But the temptation to get that short-term growth spurt as front-end rates come down is always going to be tempting for any administration led by any party.
Well, part of the scrutiny or the interest in the Fed, Henry, as you and I both know, I mean, the Fed practically has an unlimited balance sheet. It's more than just setting policy rates. Is there a scenario, to your point, where you get a Fed that works in conjunction with the Treasury and does things like switching to QE, like they did in 2009, as a means of bringing down mortgage rates?
So that really would be a very interesting scenario. I mean, if we had that, then you're very much in fiscal dominance territory. I mean, there are precedents for that, thinking about it. I mean, actually, in World War II, I mean, of course, that was for wartime financing. The Fed did work hand in hand with the administration. The Fed wanted to avoid monetization of war debt, but actually the administration and the Fed eventually agreed that that was the best way to do it. So there are precedents for that. And actually, even later on, the Fed have often resisted tightening policy because they feared the administration would just ease fiscal policy and move in the other direction. So I certainly don't think it would be unheard of if you had coordination, even if it became more explicit, between fiscal and monetary policy. Where I think the risk, though, is the market is the ultimate safeguard against this, that if you got a sell-off, particularly at the long end of the curve, with mortgage rates very sensitive to that, then I think markets would take more alarm. And I think the US is still benefiting here from the fact that they have the exorbitant privilege, they have the world's reserve currency. I think if pretty much any other country, including any other developed country, were trying to do this, I think markets would be panicking a lot more than they currently are.
We're very calm, Henry. So it begs the question, what's the more important macro event? What's happening at the Fed or Nvidia earnings after the bell today?
Well, given how markets are reacting, you'd think it was Nvidia. Indeed, I'm struck that a point that I've seen observed is that the start of this current bull market in late 2022 almost perfectly coincided with the release of ChatGPT. And in that time, we've seen the S&P 500 become more and more concentrated in the Magnificent Seven, in these big tech stocks. By some measures, this is the most concentrated market in decades, indeed far more concentrated now in tech than it was even at the height of the dot-com bubble. So in that sense, Nvidia makes up, I think, nearly 8% of the S&P 500, so that's a hugely important thing. But then again, I think monetary policy is pivotal because, not just because tech is particularly sensitive to rates, but because that affects the entire market and the entire growth outlook. If the credibility of US institutions start to be eroded by Trump, that's very hard to repair quickly, particularly when it comes to the value of the reserve currency status, the way in which that enables the US to borrow at rates more advantageous than it would do for a country that runs 6% plus deficits. So I think the Fed independence question is much more important in the coming months, but I think in the next 24 hours, clearly all eyes are on Nvidia with the market at another record high again.
Well, Henry, this story doesn't seem to be going away anytime soon. We hope to catch up with you again shortly. Henry Allen of Deutsche Bank, thank you so much for your time this morning. Let's now get you some other top stories that are trending on the terminal today. The Justice Department's criminal probe into United Health's operations is going beyond Medicare. Bloomberg sources say that the DOJ is also digging into its prescription management services and doctor reimbursements. United Health says it has full confidence in its practices. Lego hit a sales record and says it plans to double down on the Asian markets with new stores and factories. The Danish toy maker brought in $5.4 billion in sales in the first half of the year. That outpaces its rivals Mattel and Hasbro. And the Dutch government in turmoil. Dutch lawmakers have filed a no-confidence motion against the government. That follows a showdown today that could lead to the prime minister stepping down. Again, just crossing, Dutch lawmakers have filed a no confidence motion that could cause an early exit of the prime minister and his cabinet. That also follows some of the turmoil in the French government. Coming up, the U.S. slaps India with a 50% tariff. We're going to have your trade update for you next on your Bloomberg Brief.
You know, we put a 50% tariff on India on oil. You're going to see a lot more.
So this is a taste of
You're going to see a lot more. You're going to see so much secondary sanctions.
And that 50% tariff has kicked in. President Trump has followed through with his threat to secondary sanction India over the country's continued purchasing of Indian oil. For more, we're joined by Bloomberg's Brendan Murray, who tracks global trade for us. Brendan, India had attempted to avoid this, but not so. They get the 50% tariff rate starting today.
Yeah, exactly. That 50% tariff is going to hit more than half of India's exports to the U.S., textiles in particular, and things like jewelry as well. There are some things that are exempt, like electronics and smartphones, so those were sort of carved out of this. But there's no question that this is going to cut off a lot of trade between the U.S. and India. Now, India has been about the number 9 ranked trading partner in goods with the U.S., and that's been the case pretty steadily over the past decade or so. So it's not a huge amount of commerce, but it's a decent sized trading partner that is definitely going to test the pain threshold of a lot of Indian exporters.
And of course, this is over Russian oil. I think I said Indian oil, but that is self-evident. Brendan, elsewhere, this story just breaking from the team over at Bloomberg that the EU is said to be planning to propose removing some U.S. industrial tariffs this week. Why would that move be taking place? What would the EU be hoping to accomplish?
The EU is trying to accomplish this very quickly. This was one of the conditions that the U.S. put on Brussels for carrying out the framework trade agreement that they have announced in recent weeks. If the EU can get that through the legislative process, the U.S. in turn will lower auto tariffs on European cars from 27.5% down to 15%. And that could be, if they get it done this week, the Europeans get it done this week, that could be retroactive to August 1st. So there's a lot at stake for the German auto companies in a quick implementation of the European side of that issue.
I'm sure they would be really relieved, but Brendan, it's still a lot of sticking points. Does it allay the Trump administration's concerns, for example, about digital taxes, something you and I had talked about yesterday?
Yeah, exactly. The president threw the digital tax issue into the mix, and that probably ignited some the Europeans to move more quickly because you throw something an issue like that, which is basically a red line for the Europeans, into the talks at this late stage, and the whole thing could come apart, or at least anger some EU members that stand firmly behind their digital regulations and taxes. So you see the Europeans moving as quickly as they can to get across this threshold with this framework agreement before President Trump decides he wants to make those negotiations even tougher to pull off.
Brendan, thank you very much for those latest updates. Again, the EU looking to remove some of those industrial U.S. tariffs. Brendan Murray, who leads our trade coverage. Coming up on the show, secret talks between Exxon and Rosneft, and a look at what else is making news in your front pages. Plus, don't miss our live conversation with Volvo Cars CEO Håkan Samuelsson that takes place later this hour. This is Bloomberg. You are watching Bloomberg Brief. I'm Danny Berger in New York. Let's take a look at the front pages this morning. What's making headlines on the world's major publications? First up, the Wall Street Journal has this on their front page, that Exxon has been holding secret talks with Russia's biggest state energy company, Rosneft. According to the Journal, senior executives from both firms sketched out a roadmap for going back into business and returning to pumping oil and gas fields off of Russia's Far East coast. Next up on the Financial Times, reporting that complex discussions between Microsoft and OpenAI may push OpenAI's restructuring into next year. The two companies have been locked in talks over an existing commercial contract. A delay could complicate OpenAI's efforts to raise more capital. And finally, on the Washington Post, they are covering more than a dozen FEMA employees being put on leave after criticizing the president in an open letter. Around 180 current and former staffers signed a letter saying that current leadership inexperience could result in a Hurricane Katrina level disaster. Now, elsewhere in these markets, the euro strengthening versus the dollar. Check this out, by 0.4%, despite the fact of more concerns over the Fed and Fed independence. In fact, yesterday you did see a weaker dollar, but really that not acting as a release valve of concerns. We're speaking with Allen of Deutsche Bank earlier, who's saying that market turmoil would be the thing to push back against President Trump. Notably, it is not doing so. Well, coming up, we count down to the highlights of the earnings season. Nvidia, that reports after the bell, and we're going to catch up with RBC's Lori Calvasina on this earnings season. That's coming up next. Stay with us. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know this Wednesday. Trump's Fed gamble. The administration looks for more ways to exert influence, zeroing in on the Fed's regional banks. Sky-high tariffs. The U.S.'s crushing 50% levy on Indian goods take effect today. And it's the results that we've all been waiting for. Nvidia set to report its quarterly earnings after the bell today. We'll see if that can shake up this equity market that's unmoved this morning. Little change for both the S&P and NASDAQ, which, by the way, we rallied yesterday despite all of the challenges to Governor Cook. That she's fired. Is she fired? Will she be gone? Is the Trump administration going to nominate someone soon to go into the Eccles building instead of her? What has been reacting is this bond market. Significant steepening taking place. 2s and 10s fell yesterday. They fall again this morning, led yet again by the front end of the curve. 2s at 364.95. The 30-year yield drops by a basis point, but less than the front end at 490. So still we have curve steepening. 2s, 30s at the steepest since 2022. Let's look at some of the stocks now moving in the pre-market. With that is Critty. Hey, Critty.
Hi, Danny. Let's keep an eye on Eli Lilly this morning, higher by 1.7%. 24 hours ago, this was a stock that moved on the idea that their obesity bill was hitting a key threshold that needed for marking about 9.3%. And the party continues in the stock after a monster session to the upside yesterday, higher by 1.7% this morning. It's not the only one rising quite a bit. MongoDB putting Eli Lilly to shame in terms of its gains this morning. In the pre-market, higher by a whopping 29, almost 30%. This morning. Those earnings coming out yesterday after the bell, not only did they impress Wall Street, they increased their guidance as well in a very big way, getting rewarded this morning in the pre-market. United Health, I have to say, however, is not having that great of a morning. United Health did have a poor session yesterday. The idea that the DOJ is extending their probe and their investigation to beyond just Medicare, going as far as to say there may be other issues within the company. United Health falling at about 3:30 p.m. U.S. time yesterday. It looks like that weakness continues this morning, Danny.
Pretty excellent roundup. Thank you very much for that. Now, another stock that we are keeping a close eye on this morning is Nvidia. The chip maker is set to report its quarterly results after the market close. Let's bring in Tom McKenzie, host of Bloomberg Tech Europe, for more. Tom, where are expectations?
Is the demand still there? clearly, for these AI accelerators. You got some sense, of course, with the earnings from the hyperscalers suggesting that they continue to spend tens of billions, a total of more than 300 billion by the end of this year, on data centers, of course, packed full of these GPUs. The expectation for the most recent quarter for Nvidia is you are going to see an approximately 54% year-on-year jump in revenue. Revenues of around 46 billion US dollars, margins of over 72% for Nvidia. That is the expectation. Take yourself through to 2026, and the forecasts are that this company is going to be turning around revenues by the end of 2026 of more than 200 billion US dollars. So, of course, it is that gauge in terms of the AI impulse. It is that gauge in terms of the demand-supply dynamics as sovereigns start to build out and the hyperscalers commit to further capex spending around these data centers and around AI. The AI bulls out there, the likes of Dan Ives of Wedbush, say this is going to be an opportunity once again for Jensen Huang and the team at Nvidia to flex their muscles on the AI revolution. Dan Ives saying that investors and the markets are still underestimating just how much demand there is out there. But of course, the skeptics will say this is becoming a more competitive space. There are question marks about China, and will margins feel a squeeze, at least if not this quarter, then at some point in the future.
To that point, Tom, how much will politics play a central role, not just China, but American politics too, in this earnings report?
It will be fascinating to hear, won't it, if Jensen Huang is asked anything about, for example, the stake that the government has taken in Intel and whether or not, in fact, he and the company, Nvidia, will be pressured to use Intel and their foundries, their future foundries, to churn out and actually produce Nvidia chips. Most of them now produced, of course, by TSMC over in Taiwan. That could be one element of it in terms of the domestic politics. The external politics, of course, the lens is going to be on China. There's a lack of clarity. Some analysts have even pulled their forecasts in terms of the revenues expected from Nvidia out of the Chinese market because of the lack of clarity. On one front, the fact that the Trump administration has said you can have those export licenses, you can now export the H20 into the Chinese market. We will take 15% of sales, but you can do that now. On one level, that's a positive. The downside, of course, is that Beijing has come out and said, do you know what, guys, to their main large language models, their Alibabas and Tencents of the world and DeepSeeks, buy domestically, don't buy Nvidia. We have security concerns. So there is that still, that uncertainty. Bernstein analysts, interestingly, Danny, saying that there's about $15 billion on the sidelines in the Chinese market ready to be put to work to buy Nvidia chips if those companies get clarity on that front. Maybe Jensen Huang will have something to say about the Chinese market and his expectations.
Yeah, and to that point, the FT just pushing out a story, Tom, saying that China is looking at tripling its output of AI chips to boost its DeepSeek initiatives. Tom, thank you very much for that update. Bloomberg Tech Europe anchor Tom McKenzie. Joining us now around the table is Lori Calvasina, head of U.S. equity strategy at RBC Capital Markets. Lori, really wonderful to see you this morning. So as you're thinking about Nvidia, maybe not even just the individual company reaction itself, but how big of an event is this for the entirety of the market?
So look, I think August has been really interesting. If you go through this earnings season, we actually saw the tariff-related sectors see margin expectations for both 2Q and 3Q come in a little bit, and tech margin expectations moved up, right? And if you kind of go back the last few years, what we often see in reporting season is that the light gets shown on these kind of cyclical value parts of the market, and investors are like, okay, we're reminded that this exists and things are pretty good. And so you see some broadening of the market leadership. You see some rotation. Well, that didn't happen this time, right? And so we got to the end of the reporting season, and all of a sudden, almost from out of nowhere, we got this skepticism on the AI trade. And we saw this broadening, sort of happen again. We saw, kind of NASDAQ 100, top 10 names in the S&P 500 hit peak valuations, at least the recent peaks, and start to trend back down. So can that AI fascination get back on track? To me, as we close out August, that's sort of the interesting angle here.
Does that leave us less vulnerable then for a disappointment coming from Nvidia, just given that some of the sentiment surrounding AI has dampened a bit?
If you look at growth relative to value, it's just been chopping back and forth the last couple years. And if you look at where we've been most recently, we've been at the tip top of we kind of broke through the top of the range. We're still pretty extreme. The valuations are still pretty extreme. So I think the whole market, frankly, is a bit vulnerable from a valuation perspective. But just the narrative has been so choppy. Can we sort of get the focus back on that AI narrative? That's really what I'm looking to see.
Even so, the narrative on earnings, Jefferies had a statistic out that 44% of companies that issue guidance raised them for the quarter, the highest since 2021. You and the team, though, have been digging through earnings commentary, and it seems like there's still a lot of talk about tariff complexities and uncertainty out there. Is that in tension with each other, this idea that on one hand companies are raising guidance and on the other hand they're still saying we don't really know what the outlook looks like?
Well, what guidance are they raising? Are they raising full year 2025 guidance, which has been pretty strong if you look back? We spent some time looking at growth rates for 2026, and it doesn't look to me like you've seen a lot of incremental excitement come into the 2026 outlook if you look at the shift in the anticipated growth rate for next year. So we've been, kind of throwing a little bit of cold water on this idea that this was just the most fantastic earnings reporting season ever. If you look at kind of what changed in a lot of the numbers, we saw companies come in and say, well, tariffs are going to impact us by X, Y, Z. It'll be this in 3Q, this in 4Q, it was this in 2Q, and it's a lower number generally than what they were saying in the last reporting season. So, what do we think of that, right? The market rallied ferociously. This was the hottest growth scare rebound we've ever seen, basically, outside of 2023. And so I think investors kind of knew that that math was going to pan out that way as we were getting some of the dialing down of the different tariff announcements. But, I look at it and a lot of this just feels mechanical. And, if you compare it with what was already baked in, I'm not so sure things were as fantastic as some people are saying.
Laura, you sound anything but bullish right now. What does that mean for your expectations of where we go from here and whether we can stay around all-time highs?
Yeah, look, so we've said that we're neutral on equities in the back half of the year. Our target is 6250. Frankly, there's a wide range of outcomes in our modeling. So the 6250 is actually halfway between the average and median. It's really trying to bridge the gap between what we've seen on some of the more sentiment-driven indicators and what we've seen on some of the more fundamental indicators. The latter are more pessimistic, the former are more optimistic. And I have to tell you, Danny, we look at this sentiment run and it feels like the vibes are very mixed to end the summer. We've seen some of the consumer sentiment surveys pull back a little bit. If you even look at investor positioning, AAII is sinking like a stone this month, right? We saw net bulls come in at minus 14% last week. A 4-week average, I think, is minus 7.8%. It only peaked out at average. The last time we saw this indicator falling without a big decline in the market was 1Q of this year. So people can make of that what they want. But then if you look at, CFTC data, that's looking pretty frothy, especially if you look at kind of NASDAQ 100 futures positioning. So, I see some signs of bullishness, which may be getting overdone. I see other indicators, which have been very early but very prescient, also falling. So, we're prepared for chop.
What do you then make of a small cap rally, of a market that feels more exuberant about cuts, that a small cap that outperforms yesterday because they look at threats to the Fed independence and read it as, okay, more doves, more cuts, go small caps?
So look, this is my old stomping ground from like 2007 to like 2014. This was all I did with my life. And, we still spend a lot of time on this part of the market today. And I've noticed a number of other strategists around the street, and no disrespect to them, but they are trying to go out and make these bullish small cap calls. And the reality is that cuts are one thing that can get small caps going. If you go back and you look to the mid-1990s, we had some adjustment cuts. And I actually spent some time with my rate strategy team last year kind of sorting through this issue. And you ended up getting short-lived small cap outperformance. So that's a good reminder, because a lot of times people do these studies and you see the cuts, but they're happening in the context of recession. So let's go back and look at the economic angle. Small caps need a quickly accelerating economy, a really hot economy, to really sustain outperformance. And that can come from breaking the economy and running fast off the bottom, or it can just come from a hot economy with, say, more like 3% GDP for other reasons. My economist, Frances Donald, she's looking for GDP in the mid 1 to 2% range for this year and next. And guess what? So is consensus. So that's not a hot economy. ISM manufacturing is stuck in a rut. Jobs growth, we typically want to see the NFP data ramp for small caps to outperform. It's been kind of stagnant, right, to declining. That's not a recipe for small cap outperformance either. The hedge funds since late 2023 have tried to jack up this part of the market when they want to make their dovish bets. It is very fickle money. As soon as they take that over their skis and they realize the economy is not so hot, they dial it back down. So enjoy it while it lasts. It can go for a little bit longer, but I am really pushing back against like a longer term overweight. We want to be neutral.
It does just feel, Lori, that this and what you were saying before underscores what feels like an aspect of this market, which is a disconnect between the macro narrative and what stocks are doing. What resolves that disconnect?
Look, whatever it is that resolves it, whatever catalyst is, we're a lot closer to it now than we were a couple months ago. And so, if we look at S&P 500 market cap weighted and the top 10 market cap names, we're trading one's at 29 times, one's at 26. I forget which one is which. It's been a long summer. But both of those are right at the top of the range. And what that tells you is there's just not a lot of room. And then if I look at, say, S&P equal weighted or the S&P X the top 10 market cap names, you're trading at more of like an 18 times. So you could move up a little bit more. So there's some scope for rotation. But I'll tell you, Dan, if you look at small cap valuations, you were at 16.3 times before Jackson Hole. The average is around 15.2. We topped out in January at 17, and then we looked, around 18 last November. So there's not a ton of room there either. You could have a couple good weeks. I don't want to put like a time frame on it. But, if you think that we're off to the races for the next year or the next 2 years, I don't think that's right.
Well, Lori, this feels fitting for the waning days of summer to have a note of caution. Thank you so much for joining. It's always a pleasure having you. Lori Calvasina of RBC Capital Markets. Coming up on the show, Volvo looks to boost its China sales amid fierce competition in Asia's largest market. Håkan Samuelsson, Volvo Cars CEO, will be joining us next. This is Bloomberg. Welcome back to Bloomberg Brief. Danny Berger here in New York. Now back to trade and lines crossing earlier this hour. Sources telling Bloomberg that the EU will propose removing U.S. tariffs this week. For more, joining us is Bloomberg's Brendan Murray, who tracks global trade. Brendan, what do we know?
Yeah, this is the European Union really trying to close some of these loose ends that they've reached with Washington on the framework trade agreement that will bring tariffs down on both sides. These industrial goods, Brussels needs to act on quickly because if they can do that, then the U.S., which has promised to lower tariffs on European cars imported into the U.S., those will take effect and could take effect even retroactively to the beginning of whatever month the European Union acts upon. So in this case, August 1st. So this is a big deal for European car makers if Brussels can get this finished by the end of the month.
So it's something that Europe, to your point, Brendan, had really wanted for these car makers. But how does it underscore the fact that we've already had a framework in place and still negotiations are going on? What does this say about further out into the future as we try to assess and get certainty just on where tariffs stand?
Yeah, exactly. I mean, I think it suggests that these negotiations can flare up with retaliation or de-escalate at any given time, really. We heard the President, Trump, talk about the digital taxes. He didn't specify the European Union, but that seemed to be what everyone thought was the intended target. He raised those as an issue that the U.S. doesn't like, and that he will hit those countries with tariffs and export controls. So it just seems like we're in the beginning of the cycle of tariff threats. The president said yesterday in the Oval Office that you're going to be seeing a lot of what he was referring to as these secondary tariffs. We've seen the extra 25% come on top of the tariffs from on imports from India. Those are now 50%, and that's going to cut off a lot of trade from the U.S.'s 9th biggest trading partner.
Elsewhere, Brendan, today starts the official day of India receiving 50% tariffs, something that they had tried to avoid too. Is 50% the final number, or are negotiations still ongoing?
Well, it depends on how the Modi government reacts. Will they cave in like the Europeans did and the Canadians did when faced with these sky-high tariffs? We don't know yet. India has a lot of big trading partner allies in its corner that it can lean on, but this is definitely going to leave India at a competitive disadvantage across Asia in industries where it employs a lot of people, and so you're going to start to see layoffs and production shutdowns and those kinds of things in the meantime. But this is really one of the first uses of a very high tariff by President Trump to try to accomplish this geopolitical goal in stopping India from buying Russian oil. We've seen similar moves with high tariffs on Brazil, but this one really is striking at the heart of the Indian economy and Modi's efforts to make India a manufacturing powerhouse that can rival China.
It's interesting to hear from Modi. Brendan, to your point, will they cave like the Europeans do? Modi is really pushing back, and officials encouraging Indians, for example, to buy more domestic goods. We haven't really seen a lot of pushback from other countries, to your point. Do we understand how this sort of tactic might work against the Trump administration?
Yeah, we've seen some of it in Canada, where Canadians sort of boycott American products where they can. We haven't seen a lot of it in Europe. So there's only so much domestic goods that your local population can buy until it has to purchase something that's imported into the country. So it's yet to be seen whether something like a boycott or a buy local movement pushed by the government in India will have any sort of leverage back on the Trump administration. But at the moment, the pressure is really on India's economy, and 50% tariffs, if they stay in place for a while, are going to leave a big headwind for India's companies that export to the U.S.
Brendan, thank you very much for all of your work this morning. That is Bloomberg's Brendan Murray. Now let's get you some top stories that are trending on the terminal this morning. The Justice Department's criminal probe into United Health's operation is going beyond Medicare. Bloomberg sources say that the DOJ is also digging into its prescription management services and doctor reimbursement. United Health says it has full confidence in its practices. Lego hit a sales record and says it plans to double down on the Asia markets with new stores and factories. The Danish toy maker brought in $5.4 billion in sales for the first half of the year. That outpaces its rivals, Mattel and Hasbro. And the Dutch government in turmoil, the Netherlands facing a parliamentary showdown today that could lead to the prime minister stepping down. Earlier this hour, Dutch lawmakers filed a motion of no confidence that could cause an early exit for the PM and his cabinet. Coming up, the last leg of earnings pour in and a Treasury auction. We're going to get you set up for your trading day. That's coming up next. You're watching Bloomberg TV. Welcome back to Bloomberg Brief. I'm Danny Berger in New York. Let's get you set up for your trading day on this Wednesday. We're going to get more retail earnings. Kohl's, Abercrombie & Fitch, Williams-Sonoma, all of those are out with results before the bell. Remember, Williams-Sonoma got crushed after those tariff investigations into furniture. 1 p.m. Eastern time, the Treasury will be auctioning $70 billion worth of 5-year notes. And then the big event, Nvidia, that will be reporting results after the market close. Some individual movers. First, a check on Nvidia ahead of those second quarter earnings. Shares little changed as we wait for that, just up about 0.5%. Also little change after a big plunge yesterday. United Health down 0.1%. That Bloomberg scoop about a DOJ's criminal probe being broader than earlier reported. Finally, Eli Lilly, another day of gains for them. It would appear their weight loss pill moving ahead with a pivotal trial. Those shares are up 1.7%. Meanwhile, a check on this bond market, because that's where we've seen most of the reaction to the concern over the Fed. Will Lisa Cook be leaving the Fed? Trump trying to fire her. We have had a change in this bond market in the past 30 minutes. Now we are looking at more curve steepening. The 2-year yield, that follows by 2 basis points. Little change for the 10s and 30s. But let me show you the 2s, 30s yield curve, because that has really been picking up. As a matter of fact, we are now looking at the steepest yield curve since 2021. It is a long end being moved by independence threats, inflation, or otherwise, keeping that elevated. All right, that is it for your Bloomberg Brief. Surveillance takes things from here. You're watching Bloomberg TV.